So here now to explain their call is Hussein Allidina. He is Morgan Stanley's head of commodity research. And Hussein, you're saying that on the one hand, there's a fundamental explanation for why oil could rise, but also there's one that has to do with trade flows, correlation with the overall risk trade or risk aversion trade. Why is correlation a bigger factor right now?
Absolutely, Scarlett. I think if you take a look at what's evolved over the course of the last 12, 16 months, risky assets have, broadly speaking, been highly correlated. We don't expect those correlations to fade anytime in the near future, but our constructiveness into the end of the year stems from both an improvement in the fundamentals, the supply and demand, coupled with an appreciation in risk appetite. Morgan Stanley's economists are broadly constructive here on global growth, despite the concerns in the U.S., and ultimately we believe that does contribute to lifting risky assets as well as supporting commodities like crude oil.
Okay, so we've said $95 by the end of the year, but you say $74, which is where crude is trading today, is basically the bottom. And to break below that, we would have to see a double dip, but you don't see that happening.
Admittedly, yeah, the $95 is a little bit aggressive into the end of the year. Directionally, though, we do believe crude moves higher. Nothing goes up in a straight line. In the near term, we're going to see some concern as refiners here in the U.S. go down for maintenance. That'll pressure crude spreads as crude demand is tempered. But heading into the back half of the year, things do look quite good. I think, the picture today is somewhat masked. Demand is actually doing quite well. Demand from the lows is up over 3 million barrels per day. We're only 1.3 million barrels per day away from the all-time high reached in the fourth quarter of 2007. So continue to believe that the S&D is constructive.
Okay, the demand story may be robust, but what about from places like China, where the government is actively trying to slow down the economy?
Yeah, absolutely, Scarlett. If you take a look at where China is focused on reducing their sort of energy demand, it's largely in industries that don't, in fact, consume quite a bit of crude oil and/or products. It's focused in coal and other sectors. 5% roughly of the targeted industries consume crude or derivatives of crude.
And talk a little bit about inventories. We mentioned the demand side. Supply is higher than you had expected, currently at record highs, but you say that's actually misleading.
Well, I think if we look at sort of the IEA data or the EIA data, it masks the fact that quite a bit of floating storage has actually come off of tankers. That floating storage was there last year as well, but not captured. Today it's being captured in the onshore data, the DOEs that come out every Wednesday, or the IEA's monthly data. We've lost about 20 million barrels just in August from floating storage, and tertiary inventories in places that are not captured in the data, like in Germany, for example, are also down about 20 to 22 million barrels year on year.
Okay, let's move our focus to some other commodities. Let's mention wheat really quickly, because the drop in supply from Russia is certainly affecting prices there. How much visibility do you have on wheat right now?
A lot of uncertainty on wheat. We're telling investors to play the wheat story, in fact, through corn. The wheat story is very, very much a weather issue. The spring wheat in Russia has been devastated owing to the hot weather. The winter wheat, now this is the critical thing, the winter wheat gets planted October and November, and to the extent that conditions do improve, they get a little bit of precipitation, that wheat gets planted, wheat prices should come off. You play it through corn instead, because any disruption in wheat will benefit corn exports, U.S. corn exports, etc. And ultimately, we do have a constructive corn balance even without a wheat issue.
So corn is the way to go in the grain space?
Absolutely. Morgan Stanley is advising their investors to take length in December 11 crude, or pardon me, December 11 corn. It's trading around 447 right now, and think that can move well north of 5.
Okay, we thank you for your time. We've been speaking with Hussein Allidina. He is head of commodity research over at Morgan Stanley.